Hey traders, Raghee here, and in this free recap video we're going to cover the 30-year bond. Now the 30-year bond was an alert that we sent out just yesterday for a trade long, and we're going to talk about this long setup right now. Now the overall bias that I have long in the bond comes from the fact that we have a reflation trade on. And what does that mean? That means when we had the Powell pivot back around the 4th of January, and even preceding that, bonds were heading higher. In other words, the market was thinking short yield. That's what all this strength in here. What does that mean, short yield? Lower yields means get long the bond. So you're long bonds, which is a short yield position. Why would you be short yield? Well, the bond market is starting to factor in the Federal Reserve starting to become more accommodative, keeping a larger balance sheet, and ultimately the FOMC is at some point going to vote on cutting rates because hiking rates is no longer part of the equation. Again, short yield, long bond. So what we're doing is trading with that macro understanding, which gives us a whole lot more conviction to the long side. We also know to respect the trend that was. So once the market transitions into more of a chop, as it has done now, as you can see here, I'm still going to keep that bullish bias from oversold levels. Recently, however, and you can see that right in this area here, we've actually started to turn a little bit more bullish in bonds. It's actually starting to become a little bit more of an uptrend. It's not a great looking uptrend, but it's starting to turn into more of an uptrend. So we're going to look to buy pullbacks at the 21 EMA or the 34 EMA on the high. Now the importance of understanding when the market transitions into a bit of a trend as opposed to the chop is the difference between looking for opportunities long from the 34 EMA wave or from the bottom of the range. We've shifted higher because the market's starting to trend again. And that shift really came at the end of March. You could say right around here, right around this point right here, you can use this as a sort of a cutoff, we started to become much more of an uptrend. So those subtle shifts are very important. You can also see on this chart that I have some automated, what I call trade flags, and these are tools that we give members for free, and both of these are bullish. So when these are bullish, I know that I'm dealing with a market that I want to buy pullbacks in. Call that a retracement, call that a reversion to the mean, call it whatever you'd like. But what we're looking for are the pullbacks within the context of the trend like this, and we're looking for a resumption of the trend back higher like that. And the neat thing is this tool right here, and then also this tool right here, look how long it's been. You can see the transition here really well. See the shift from the blue to the green down here? This was all neutral, and then on this side, it's bullish. So I can know the precise date that we've shifted from that sideways expectation to now the bullish expectation. So these are how we gauge these types of market transitions. So the 30-year is in a bullish zone. The 10-year is in a bullish zone. The 2 and the 5, I'm bullish bonds across the yield curve. In other words, I think I can buy the 2-year, the 5-year, the 10, and the 30. This is an example of the 30. Let me show you all one more thing. If you rather look at this trade via the TLT, which is the 20-year plus ETF for bonds, this is fine. The structure looks different. It's not as flowing as the futures chart would look because this is an ETF, so the gaps and so forth are going to look a little bit different. But what I want everyone to remember is if I can buy the 30-year, if I'm looking long the 30-year futures contract, I can certainly look long the TLT. And the TLT I think is important for those of you that would prefer to buy, say, call options with the anticipation of the market moving up as opposed to buying the underlying futures contract, because these are going to be overnight trades and a lot of you might want to focus on the futures either on the 30-year or the calls on TLT. So keep that in mind. Many futures contracts have alternative ETF alternatives that you can trade in lieu of the underlying futures, but I'm still going to use that underlying futures for the trade setup. All right, that's today's recap, and I'll see you in the next update.